Hi everyone, welcome to this channel, and in this video I'm going to talk about the Canadian real estate market. The Canadian real estate market, as all of you must be aware of, is really bubbling hot at the moment with prices rising, and it seems to be unstoppable. In this video I will talk about my analysis, my views, and my understanding of why the Canadian real estate market is where it is and what we might have in the future. Just a disclaimer, I am not a realtor, I am not a real estate investor, I am just a normal taxpayer who is worried about the state of the current real estate market, and I would like to share my analysis with you. Now, this analysis does not come from an article or a report issued by a news agency or CMHC. This analysis is based on my research, reading all different views and understanding the math behind the housing market. Now, when we try to understand the reasoning behind the bubbling hot housing market, a lot of times at the ground level, you would see that the reason very commonly given is supply and demand. We would say that the supply has been historically low at this point in time and the demand is just skyrocketing. The second reason is historically low interest rates. So people can afford more debt because the interest rates are so low. And the third reason that's always given is a lot of demand because of immigration. However, most of the housing inflation has happened during the last 2 years, or if I may say, the worrying amount of housing inflation has happened over the last 2 years during the COVID-19 pandemic. So let's see if these factors that are given at the ground level actually mean something when we are analyzing the housing market. Let's talk about immigration. Over the last 2 years, there has been a grinding halt on immigration that's from outside Canada. Almost as compared to previous years, it has been halted. And even the international students are not coming in the numbers they used to be coming before. Still, we have an enormous, gigantic increase in the housing prices. So is immigration really to blame? I don't think so. Now let's talk about the actual real reason, which no one talks about, or your regular realtor won't tell you about, or people who are trying to buy a house or who are trying to sell a house would not really talk about, nor would the media. Over the last 2 years since the global pandemic began, the Bank of Canada and the Government of Canada has been printing money. And this printing money is being used to stimulate the economy. During the pandemic, the Government of Canada has run a deficit of around $500 billion. $200 billion out of this $500 billion deficit has gone into the housing market. Now here's where you have to pay attention to the math. The banks who are lending the money have a lot of cash, $200 billion of cash given by the government to lend out to end users. When there is so much of cash chasing so few houses, of course the prices are gonna skyrocket. However, you may think that banks would still do some risk assessment when giving out these mortgages or giving out loans, although they are essentially getting free money at such negative interest rates. However, they're still taking a risk when they are borrowing from the government and lending to consumers or home buyers. So let's try to understand how banks do the risk assessment. Number one, most of these mortgages that are issued are variable rate mortgages. Now, the variable rate mortgages, for those of you who don't know, mean that the interest rate is subject to market forces. So say that in the market, the interest rate currently is 1.4 and buy a mortgage at that rate. And if tomorrow the rate goes to 2%, that means my new monthly payment will increase, keeping in account the 2% interest rate that is currently in the market. So as the market goes up and down, the interest rates will change on that mortgage. Currently, 51% of mortgages in Canada are variable rate mortgages. This is really serious. This means that if you are at the edge currently in terms of mortgage payments, tomorrow if the interest rates rise, you are going under. You are going in negative expenses, and you might not be able to afford a house you're living in. Number two, a lot of these mortgages are actually high ratio mortgages. So what does that mean? That means that most of these mortgages are purchased at less than 20% down. Banks allow for a first-time home buyer to put 5 to 20% down. It's their choice, and they could do that and still qualify for a mortgage. However, here's where things get interesting. Whenever a home buyer is putting less than 20% down, they need to purchase a mortgage insurance. So this mortgage insurance is an instrument that basically protects the bank in case the home buyer who is buying a home at a 5% down payment or less than a 20% down payment defaults on their loan. Well, now you would say that if the banks are giving out loans to people who are paying for mortgage insurances, that means those loans are insured, and hence if the loan is insured, then bank's risk goes to zero. Now if the bank's risk is zero, then you can imagine how much due diligence would they do before giving up the loan. These high ratio mortgages which are insured by CMHC, which is Canada Mortgage and Housing Corporation. CMHC is a crown corporation. That means it's a government body that insures the mortgages that are high ratio, that have less than 20% down payment. The CMHC guarantees these loans to the banks, and hence banks basically are guaranteed that they have no risk because CMHC is there to protect them. Now if CMHC was a private body, then the banks would still be worried because a private company can declare bankruptcy, right? Well, CMHC is a government body, right? The government body can go under, but when a government body goes under, well, they have access to something that none of the private organizations or individuals have access to. They have access to the Government of Canada and the Bank of Canada's money printing machines. Well, if they go down under and they have an obligation of say $500 billion, they just need to press and print on the Bank of Canada printing machine, and voila, they have the money to pay all the banks. Now you would ask that, well, sure, all these factors are or might be adding to the housing inflation, but what about the normal people? How are they able to afford these mortgages, or how are they able to even qualify for these mortgages in the first place? For $1 million mortgage, you need to have a household income of around $250,000, and you would think that's a really high number, and a lot of these people who are buying might not have that income. That is where a middleman comes in, a mortgage broker. You don't need to have an income. You don't need to have 250,000. You don't need to have 100,000 in income. You don't need to have 50,000 in income. All you need is a person who is willing to, on your behalf, falsify documents, forge documents, and commit some mortgage fraud in order to qualify you for the mortgage that you need. This is a very common practice. I know about it. The internet knows about it. Reddit knows about it. Everyone in the Toronto area, Vancouver area knows about it, and it's virtually impossible at this point to afford a house without it. So if all of us know about it, you'd say, why don't the banks know about it? The banks should know about it. Who are the ones who are lending the money? As I mentioned before, these high ratio mortgages with less than 20% down to the first time home buyers are insured. So banks have zero risk. If banks have zero risks, and even if they know about all the mortgage fraud going on, they don't really have any incentive to crack down on that fraud. In case the market crashes or the home buyers default, they have the CMHC to cover their backs. In short, the banks will continue giving out credit to people to buy houses, and the more credit they give out with very little validation and ignoring all the mortgage fraud that's going on, the more the property values will continue to go up. So to summarize, the reasons that are propelling the housing market, first is the stimulus money that has been pumped into the system by the government. Number two is these insured mortgages, which are insured by the government body called CMHC, which can never default or never go bankrupt. And number 3 is banks having the protection of these insured mortgages and not doing any checks for frauds or doing any checks for actual income verification with the CRA, or even checking the documents before they're issuing these loans, because they virtually have zero risk when issuing these loans. Now the next question that we have is, what will happen in case the interest rates go up and people start defaulting? Well, if the interest rates go up, it's possible that people might not be able to afford the houses that they are living in. And in case the market starts coming down because of that, people might walk away from their houses and there will be foreclosures. In case of a foreclosure for insured mortgages, the banks will basically send the bill to CMHC, and the CMHC, because they have insured the mortgage, will be paying the banks. Basically, they will bail the banks out, similarly to what happened in 2008 financial crisis, where the American government bailed all the banking institutions. Similarly, CMHC is a public bailout fund for all of these banks taking the risks. Who will be paying for this? The taxpayer, because the CMHC is a government body. Whatever the bill is going to be paid by taxpayers. So at the end of the day, when the housing market goes up, it's the taxpayer who's going to suffer. When the housing market goes down, it's the taxpayer who's going to suffer. The banks, as always, the financial institutions are going to profit and they will be bailed out at the end. So if at the moment you are a new home buyer, you're looking into the market, please do your due diligence. Don't just listen to what your agent tells you, real estate agent or your mortgage agent tells you. Do your own study, understand the market, and be careful before you go into the market at this point. I have given you all the factors, and this is basically my study over the last few months and my observations over the last few years actually, and I've summarized these, and this is something that I never found in any book. I picked it up from different places and I have put it in this video. Hopefully you understood something about why the housing is so much inflated in Canada at this moment, and hopefully we have something in the future. The government does some sort of intervention, but what I think is we are way beyond the point of intervention at this point. I think it's going to be a natural correction and it might turn ugly. Well, thanks for watching. I hope you liked the video, and if you did, like the video and please share it with a friend. Thank you.